What's up, everyone? Hope you guys are all having a great weekend. In today's episode, I'm going to give you my watch list for Tuesday morning and my game plan for how I'm going to wrap up the month of May. We've got the last week ahead of us, and this right now has been the best month of the year, and we've still got 4 trading days left. And in a way, it's kind of reminiscent to me of the way the market started to pick up in 2020. Now, April, May of 2020 were fantastic months for me. And then all of a sudden in June, things exploded and I had my best month of my entire career. Now, I'm not saying that next month is going to be the new record of the best month of my entire career. It could be, but there's no way to know for sure. But what I can say right now is that we have incredible momentum in the market, and that's giving me the conviction and the confidence to trade more aggressively, right? It makes sense. When you keep seeing stocks going up 200, 300, 400%, you think to yourself, man, maybe I should buy some of these setups with a little bit bigger share size. Maybe this is a market where I should be taking a little bit more risk. And you do that, you get rewarded for it, and then the market continues to give you those big moves, and all of a sudden you see that exponential growth in your account. And that's what I'm experiencing right now. I'm already up more on the year here right now today on May 24th than I was all of last year. Wow. And we've still got a lot of ways to go. So I'm excited. Now, during today's episode, I'm going to share with you 3 tips that you could try implementing in your trading in the coming week. My goal is that these tips help you get focused on the right stocks to trade each day, help you know when to be the most aggressive, and learn when to walk away. These are really important tips, so make sure you stay tuned and watch this whole episode. So let's go ahead and jump onto the screen share and start breaking things down. On Friday, we had a 250% squeeze on IMNN. This is a penny stock, and actually going into after hours, it pushed even higher. It must have been up over 300%. We can pull out the ruler here and just measure it. So we went from there all the way up to, what was it? Wow, 305%, 298%. Amazing. And then all of a sudden, guess what? Right here at 7 p.m., the stock puts out news of a $9.75 million private placement. Now, typically, any type of offering is going to hurt the price. So an offering is when they're selling more shares on the market. They're raising $9.75 million, and that's money that's going to go into the company to help them continue to fund continued development, continued R&D, specifically in the case of this type of stock, which is in the pharmaceutical sector. So in this specific headline, the problem is that the purchase price was 45 cents a share. Ooh, now see, the problem there is, imagine just for instance, that you today got 14 million shares at 45 cents a share. What would you do with those 14 million shares when the stock is up 300%? You would sell them, right? I mean, that's kind of the logical conclusion. And so now all of a sudden we're looking at the stock, which already had a float of nearly 14 million shares. So now the number of shares available has doubled. And in theory, that should make the price drop in half, because the value of this company, I mean, it already went up 300%, but now you're going to double the amount of shares available. It's not going to be able to sustain these prices. Now, the only scenario where it could sustain these prices would be if the offering was priced up around this current level. Because what that would then tell you is that these investors who bought into this stock had the conviction to pay $1 or $1.20 or $1.50 a share for it. But they had the conviction to only pay 45 cents a share. And you can't blame them necessarily, but that's not a good look for the stock right now. And so unfortunately, this one probably is not going to give us continuation. So this is probably not going to be a stock that we're going to trade on Tuesday. Now, I'm going to pull up my my calendar here for the month of May. So right now I'm sitting at $541,000 on the month. And I mean, it's been really strong. 73,000 the first week, 160 the second, 166 the third, and 140,000 just this last week, with really strong momentum on Monday and Tuesday. Now, it did taper down a little bit on Wednesday, Thursday, Friday, but I really think that was because we were coming in to the Memorial Day weekend. Companies were less inclined to put out really good news before a long weekend where it's going to get forgotten. So now what I'm looking forward to is seeing if we get some nice headlines here early next week. So here's my first tip for you guys. Make sure you're trading stocks that are obvious. Ask yourself, is this stock that I'm looking at right now the obvious stock? And let me give you an example. So KDLY, for instance, this is a stock that, as you may know, made a really big move over the last week and a half. It's no question about it. I mean, this is a huge percentage move. However, as it continued going higher on these days right here, I kept asking myself this question: is this an obvious stock? And the answer was pretty clearly no. How do we know that? Well, let's look at the volume for starters. So on the first day it made a big move here, it had 65 million shares of volume. Now, that's pretty good. 65 million shares is solid. That's good volume. But there's certainly other stocks. Well, IMNN had over 300 million shares of volume. It was a cheaper stock, but 65 million shares of volume is pretty good. But then on these days back here, as the price started to rally back up, on this day, we had about 29 million shares of volume. And this is a day I traded it. Why? First daily candle to make a new high. So a sell-off was looking for the bounce, and we got it. But then as it continued higher on these days, notice the declining volume. And even as it pushed higher on this day and this day, the volume is still very light. And so there's this sort of interesting divergence here where this stock actually made a new all-time high versus the high on this candle. But it did it on such light volume, which tells us that there wasn't a lot of conviction behind this move. There weren't a lot of people that were really feeling passionate about this squeeze. And so although it pushed a little bit higher and some shorts probably got squeezed out, unfortunately, some people probably bought way too high, and now we're seeing this reversal. It's going to come back down. So this stock was obvious on this first day, and it was pretty obvious on the second day. And then after that, not so much. Well, we had a couple other stocks that people have been mentioning, and I've had the same concern. TOPW. So TOPW, this is a stock that made a big move back here with about 14 million shares of volume. So yes, it was the highest volume day it had ever had. And some people have been saying, watch this for the breakthrough 11. And I've been saying, well, but look at the volume. There's no volume there. So yes, if the company comes out with breaking news and it's a really good headline, then we should watch that for the break of 11. But if it doesn't come out with news, it's not, even if it breaks 11, there's not going to be a conviction behind the move. And it's not going to squeeze. I just don't think so. It's not likely. So yes, you do have occasionally a stock like an RGC, which really makes very little sense at all, but keeps pushing higher. But you have to remember that this is more likely to happen on a certain subset of stocks in the market. What are they? Chinese stocks, where the float is very small and controlled by a very small number of people, which means essentially the entire float is locked up. And so these are stocks that we've seen make really big moves before, like HKD is another example, where this stock went, this was back like over a year ago, but this stock went from about $20 a share up to $2,500. But to be honest, and I know this is incredible to look at this chart, but to be honest, it wasn't tradable. On this day, it only had 350,000 shares of volume. There was no buyers, there was no sellers. How does the price go up that high? Well, essentially, it's because the float was so small that a very small number of shares created enough demand that the price was able to go up that quickly. But you couldn't have gotten in and out with any real positions. You couldn't have traded it. So shorts, maybe some of them got squeezed, but really no one was able to trade this. And so when I looked back at KDLY, I said something that you might find interesting. I said, this is a stock that's not good for small account traders. Why? It's too expensive. It's $30 a share. So you can't really buy enough shares to make good money. And then for traders that have larger accounts, like myself, it's also not good. Why? Because you can't buy very many shares because there's no volume. There's no liquidity. So in other words, it's not really good for anyone. Could it be good for some people in the middle that have just enough shares, just enough account to buy, a couple thousand? I mean, maybe, but it's not really good for them either because there's still not enough liquidity. It's not obvious. So you can't get good risk to reward ratios. But unfortunately, stocks like these can become a distraction as they are pushing higher. And then you get dispersed attention in the market as people say, oh, I should trade this. It's moving quickly. I sometimes call these stocks an illusion. They're a mirage. They're making a big move, but you can't really make money trading them. Like I said, if you have a small account, you can't afford it. If you've got a big account, well, the spreads make it untradeable. So it's like, it's the illusion of hotness. It's the illusion of momentum, but it's not real. You can't really make money on it. So my first tip is to focus on stocks that are truly obvious. And that means looking at your scanners right here and saying, what stock today is the leading percentage gainer? What stock has the most volume? Now, typically the leading gainer also has the most volume. The most volume was IMNN, and that was the leading gainer. Well, it was the second leader. Here we have a stock DGLY, but this was actually a reverse split. So this one's a little bit complicated. The volume is fairly light on it, but in any case, the top, look in the top 5, and that's where you should be finding the stocks that most likely are the right ones to trade. They're going to have more volume. They're going to be bigger percentage gainers, and they're going to be what people look at. Now, this also kind of is worth reminding you that if you're using a commission-free broker, you get free trades, right? So Robinhood, Webull, Charles Schwab, all these brokers, commission-free. So how do these brokers make money? They make money when you trade because they get kickback on the profit that the wholesale clearing firm, the wholesale broker makes, the payment for order flow broker makes on every share that is passed through. So they're incentivized to encourage you to trade, even potentially if it's at the detriment of your account. They want you to trade. So what are they going to do to encourage you to trade? They're going to make trading, they're going to make these stocks that are moving, they're going to put them right in front of you. They're going to make it easy for you to see. So some apps will give you notifications on your phone when you've got one of these big stocks moving. They'll send out email watch lists of all these stocks moving each day because they want you trading. They want to give you a little bit of FOMO because they want you generating commissions for them. It's not a commission in the traditional sense because it's free commission, but every trade you take, they get a little sliver of that profit. So, or even if it's a loss, they still get a little sliver of it. So it doesn't even matter if you're making money or losing money. If you're trading, they are making money. So the result is that the stocks that are moving each day have a lot of eyes on them. And generally, that's a good thing for people that know how to trade, for people who know how to manage risk. For people that are total beginners, then they might just buy these in very obscure places and say, oh, I'm just going to get in here, and when it goes up to $1.50, I'll get out. And maybe it does, and maybe it doesn't. But for more seasoned traders like myself, we are much more dialed in on the specific chart patterns and then using level 2 market data to make sure we're making really good decisions about where to get in and where to get out. So now let's talk a little bit about what's going to be on watch for Monday, and then I'll share with you my second tip. So going into Monday, the first question is, do we have any stocks from Friday? Sorry, I say Monday, but I mean Tuesday. Going into Tuesday, do we have any stocks from Friday that are worth keeping on watch? So IMNN, is it worth keeping on watch? I would say no because of the headline of the offering. Now, a private placement can be bullish, but I think in this case, because they announced what the price is, I don't think it's going to work. It's also worth noting that H.C. Wainwright is a company that is associated with a lot of small caps, and they're often involved in doing underwritings for these secondary offerings. But we know that when they're involved, the terms are usually particularly bad when it comes to the result for us as traders, because we often see that they're more aggressive with the pricing of these things. So the fact that they're involved, and you could have probably seen that even earlier in the morning, because usually when these companies put out a registration, so they'll say which firm is part of it. So let's see if this says H.C. Wainwright right down here. There you go. So in any case, just something to be aware of. But the fact that H.C. Wainwright is involved, I mean, they're involved, if you do a search of their name, they're involved in so many small cap companies that if you were going to say, oh, I'm going to avoid, any company that H.C. Wainwright's involved in, that wouldn't be productive either. So, I mean, you could see these are all these different companies they're involved with. I mean, you keep going down. The list is huge. All right. So So anyways, IMNN not on watch for Tuesday. What about SBET? SBET is interesting. This is a stock that has been rallying up. It's a recent reverse split. It's been moving up. It doesn't have what is a clear, obvious catalyst. However, it keeps grinding higher. Notice the 200 moving average right there at 7. I suspect, since it's moving up without a clear catalyst, that $7 is going to be resistance for this stock. But when we look back at the previous chart, so it really traded with fairly, it's kind of interesting because all of a sudden, you had volume that came in, but it typically trades on fairly light volume. So my kind of gut feeling on this is that when we look back at the volume on these previous days, it's like a million, let's see, do auto. Let me do auto on this. Sorry. There we go. Auto. So this was 3.5 million shares. I mean, sometimes when we see some areas of resistance here, we'll say, oh, well, that could be resistance. But how many shares of volume actually traded on that day? All right, so 2 million shares. All right, so if you have more than 2 million shares of volume, then it should easily be able to overcome any potential bag holders that are still in there from around 1350. So there's some resistance up around 1350. And I would say that more or less is the next level of resistance. So given that it's a very low float, it's something I would keep an eye on. Now, SBET, let's just type that in here. The biggest question to me is, will it be obvious? And I don't know the answer to that. It could be obvious, but if there's another stock that is making a bigger move, then that stock will likely take the attention. So yes, it gapped up 78% on Friday, coming into Tuesday morning. It's presumably going to open flat, maybe slightly up, slightly down, but there could be another stock that's opening up 40% or 50% because it has fresh news pre-market. And if that's the case, then SBET would end up being one of these stocks that kind of is a distraction because yes, it could go da-da-da-da, but it's not going to be obvious. So I would put it on a side chart. I would say it's really a hard maybe for me. If we get volume, if we get a catalyst, definitely I'm interested. But short of that, it's probably going to be a distraction. So that's going to be a side chart. I would say TOPW is the same thing. TOPW is definitely on a side chart if the company puts out news. So now imagine this. Tuesday morning, we're sitting down and all of a sudden, right at 7 a.m. or 8 a.m., we see TOPW hit the scanner and it hits like 3 times in a row. Boom, boom, boom. And if it's at the top of the hour or bottom of the hour, we're going to presume that there's probably a fresh headline that has just come out. Now I'm already going to say, wait, TOPW, I know that stock because that was one of the ones on my side chart. I may not have been looking at it when the news came out, but I'm already familiar enough with it that I'm going to pull it up pretty quickly. I'm already going to know that this is something that I should probably consider. So that's what can be helpful about creating this sort of side chart watch list of just stocks you're familiar with and just keep kind of cycling through them, as the days go by in case that you end up getting a catalyst. Now, IQST was another stock that I had on a side chart watch list, but this one has continued to kind of sell off. I was thinking maybe it would curl the way WeBuy did. WeBuy was sort of similar in that it had its first day and then curled. But anyways, IQST never did that. So at this point, it's kind of going off the list. ASST, now there's another stock that made a pretty big move. However, it's starting to pull back a little bit here. So I think with a 12 million share float, it's going to need a fresh catalyst before I would trade it. Let's see. And then these ones, so continuation, RYET, the volume's too light. It's not tradable. So that's a no-go. FAAS, 55 million share float, it's too cheap. VIGL, it's a buyout going sideways, as you can see right there. So that's a no-go. SGMA, just jumping down to some lower float ones, skipping over a few here. So I really don't see anything else here that I would keep on close watch. And in terms of recent IPOs, I haven't been doing particularly well trading IPOs. So I would just wait to see if it has news. I'll pull up the chart and I'll quickly see that it's a recent IPO. But I'm not going to go spending a lot of time looking at these because if they don't have news, they're not going to be tradable. There's going to be really nothing to focus on. All right. So tip number 2, I want you guys to try using the MACD on your charts, and I want you to try using it on the 1-minute chart. So if you pop the MACD on your 1-minute chart using standard settings like what I have here, so these are the standard settings. Input is 1226 and a signal length of 9. standard settings. You put this on your chart, on the 1 minute chart. On the 10-second, it's too quick. On the 5-minute, it's too slow. The 1 minute is sort of the perfect time frame. And I want you to look at it when you're thinking about taking a trade. So when this is open, you see the histogram is green and it's above the signal line. That's when I'm making the most money. So right here, it crosses negative, right? This pulls back. And then right here, it goes back into the positive, and we get this nice stretch forward all the way to right about here, which was right here. So that was your first window. And that was a really nice window. And then MACD goes negative, and you end up having this period that's relatively choppy. And I'm not saying you couldn't make money in here, but it's going to be more difficult. Now you get a little positive crossover here just for a moment, and I did trade that area as well, and then it sort of pulls back again. And this was a little bit higher risk. If you didn't have a cushion from this cleaner area back here, it might not have even been worth it. So looking at these stocks and looking at the MACD and asking yourself, is this truly obvious? Is this a clean setup? Is going to be really important. Let's look at PTIX from Monday. So PTIX on Monday, we'll back this up here. So let's just look at the MACD. All right, so PTIX here, this, well, for some reason my MACD is not going back all the way, but that's okay. So we have that first pop, which maybe it's because of the way my chart's set up, but anyways, it doesn't matter. So you get that first pop there and then pulls back, and then MACD's open right here. You get that nice leg higher. We pull back and then you get another nice leg right here where the MACD's open. So being really cautious trading when the MACD is clearly in the negative is important, because that's when you're more likely to get caught in chop. And it just generates unnecessary losses. Now, for me, this is something that I wasn't using for a long time, but during the bear market of 2022, I realized, man, the MACD is really helping me stay out of these choppy setups where I'm taking unnecessary losses. SYTA, this is another one where we had a really nice move here. Really nice MACD crossover right there, clean squeeze. And then here, this is where you're trading the backside of the move, and it's not worth it. I think one of the biggest struggles that I see with beginner traders is they're over trading. Less is more. But over trading usually comes from trying to recoup losses. You've taken an unnecessary loss, you're feeling frustrated, now you're trying to make it back. And so to avoid falling into that cycle to begin with, if you can start the day by trading a stock that is obvious, when the MACD is open, that's where you're going to find more success. Don't trade obscure stocks that nobody's watching. Don't trade when the MACD is negative. It's just, if you're a beginner, focus on the highest probability setup. Now, sometimes I'll see a comment, and I saw one yesterday where someone said, Ross, you tell us to focus on stocks between 2 and 20, and then I see you trading something over 20, or I see you trading something below 2. And what I tell you are what I would tell myself if I was getting started. These are the highest quality, highest probability setups. There are times where I'll trade something that's not as high quality, and I'm willing to take the risk to do that. Now, you could say, Ross, you should only trade exactly, what you teach. But what I really focus on teaching are strategies for beginner traders. I'm not a beginner trader anymore. So I try to give you that commentary of, be really careful here. This is a higher risk setup. I'm going to trade it because this is why, but just so you know. So, I think you have to kind of bear that in mind when you're looking at what I'm doing each day and comparing it to what you may be doing. You should be focusing on setups that are higher probability. Now, if you want some recommended reading over the weekend, this book, Thinking in Bets, you could listen to it on audio tape. Annie Duke, professional poker player, she wrote this book, and in this book, she tells a story about her brother teaching her to play poker. And he said, these are the hands I want you to play, and only play those hands. And she said, well, I don't understand. I see other people, playing different hands. And he said, yeah, well, but you're a beginner. I want you to focus on trading or playing the highest probability setups, hands. So I kind of am just approaching that in the same way with you guys. So SYTA, anyway, so MACD there, just focus on the MACD. And then my third tip is to try to bail fast. I want to test you guys to see how fast you can be. How fast can you trade? I was thinking about this, with video games and stuff like that. I have kids, and I feel compelled to discourage them to play video games. I don't know. I guess I feel like I lost a lot of time in my younger years playing video games, which served no purpose. And my wife said, "Well, do you think that playing the video games is part of why you're so good at what you do?" And I said, "Shut your dirty mouth." I said, "Well, wait a second. That contradicts what I was just saying." Because what I said was, the kids should not play video games and they don't serve purpose. And she said, "Well, but, the hand-eye coordination, making quick decisions." And I said, "By God, you might be right." So I can't say for sure. I couldn't. But I do feel that hand-eye coordination certainly is an important part of the job of being a trader. Having really fast reflexes, seeing something on the level 2 and reacting, seeing an exit signal and pressing the sell button and not hesitating. And a lot of people, will commend me on that and say, "Ross, wow, I can't believe how fast you bailed out of that loser. You didn't even think about it. You just cut it. You were gone. No emotion. You're out." Or you saw something and all of a sudden you're in with 20,000 shares. I mean, my goodness. So it's an ability certainly to have conviction in what you're doing. Confidence comes from building a track record and gaining experience. But then there is that, hand-eye coordination, that muscle memory, instinctive, almost reflexive, the ability to make those really quick decisions. I've read about something about neurosurgeons who play video games, being that gives them an advantage as well. So I'm not saying that you need to go practice video games in your spare time, but I would encourage you in your trading to see how fast you can be, even with small size. Not about trading with big size, but how quick can you be? How fast can you cut your losses? How fast can you jump in something that is squeezing? Can you be faster in the way you're trading? Can you bail out faster on those losers? And on a daily basis, can you walk away sooner? If you could bail out sooner and keep the losses smaller, I think it'll be easier for you to walk away each day because you don't feel that need to recoup losses. You're just like, "Hey, you know what? I'm walking away with a little bit of money in my pocket, and I'm grateful for that." And that's really important, to keep that perspective and to be grateful. I had a day last week where I went to 3 times the daily goal and then came down to 2 times the daily goal, and I felt kind of crummy. And I saw someone else say, "I'm at 2 times the daily goal. I feel great. I'm walking away. This is a great day." And I was like, we're both at 2x daily goal. You feel great and I feel crummy. Perspective. You know what? I shouldn't feel bad. I need to remind myself, 2x daily goal. For me, that's $10,000. That's great money. And this is the thing with trading, is that when trading is going well, it can exceed my wildest expectations. I mean, the amount of money that I've been able to make trading, I never would have thought it was going to happen. I mean, I certainly knew there were other people out there that were making a lot of money, but man, I just, I'm blown away. So right now I'm at about, in the last 10 years, $16.6 million in trading profit. These are the last 10 years in this software right here. So that's $16.6 million. Average daily gain, $7,500. And that's over hundreds and hundreds of trading days. I've got 31,000 trades here. And I do pull this up a lot, and I know some people are like, "Oh, here we go. He's pulling up the old scorecard again." I do think it's important that you guys know when you're learning from me that you're learning from someone who's credible, who's qualified. And part of the reason I do this is because I feel I'm so grateful that I can do it. Most of the people out there cannot, including people that are actually in the position of being a so-called educator. So I'm grateful to be able to do it. I'm really proud of this, and I pull this up a lot. This is my, kind of, I mean, it's, like a professional athlete or something. It's your legacy in a way. It's what you've done. And so, when the market's hot, I can do really well. But I also know that when it's cold, I have no choice but to size down. And I'm pretty quick about taking my foot off the gas. And that's something that I've gotten better at over the years, but was my biggest struggle for a really long time. So anyways, so now you've got 3 tips. Number 1, focus on the obvious stock. Number 2, trade when the MACD is open. Number 3, try to trade faster, bail out faster, and don't overstay your welcome. So the game plan for Tuesday morning really is going to be to watch to see what we have for breaking news. I've got a couple stocks that are on my side charts, and then I'm going to be watching this scanner right here. Now, as we reset from a 3-day weekend, we could sort of need a stock to generate some FOMO in the market. sort of to ignite those first flames. And so if we come in on Tuesday morning and we don't see anything moving, then I want to be careful about jumping in the first stock that pops, because I don't know if there'll be a sense of FOMO after, sort of a 3-day weekend. So we've got to find something that's already moving that generates some FOMO in the market, and then probably look for the next one. So best case scenario, we have something between 4 a.m. and 7 a.m. that does just, with breaking news, squeeze up like 50 or 100% or more. And it might be a cheaper stock because of what we just had. Last stock, IMNN, was cheap, but it could also be a biotech pharmaceutical stock because that would be in the same sector. So we want to look for something that's strong. If we see that momentum, we see there's some FOMO in the market, then look for the next one and try to jump in, manage risk, and ride that momentum. All right. Now, I should remind you, as always, our Memorial Day sales are going on right now, but they will be ending soon. So if you haven't already checked them out, make sure you come over to warriortrading.com, check out those Memorial Day sales, and hopefully become a member. We would love to have you guys join us. So I hope to see you in the community bright and early on Tuesday morning as a brand new member of the Warrior Pro membership. All right, I'll see you guys bright and early Tuesday morning. And reminder, as always, trading is risky. My results aren't typical. So manage your risk, take it slow. And if you want a couple episodes to watch to keep studying over the weekend, I'll put them right here, and right there.